All right, welcome back for the episode of Carnivore Trades. Today is Friday, October 27, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets here today, down about 0.5% on the spiders. Q's up the exact opposite, pretty much. 48 basis points. Dow down 1%, and the Russell just giving that whole rally from yesterday right back down 1.16 and then some, actually. That has exceeded this head and shoulder target. That's why I said it's not a buy level. It's just a downside objective here. But markets here today, a lot going on. So we had Amazon earnings. The Qs were obviously up because of that. Just get rid of this fib here. The Qs were obviously up because of Amazon, and it held most of the gains for the most part here. Did finish off the highs, but still up 6.83%. Microsoft also got a bid as well, up a little over 0.5% there. And you can see here the Qs, again, up 0.5% likewise. But they did come off the highs, and pretty much, from the get-go, we had a little bit of an outside move there. You pretty much faded the whole day outside of the last 10 minutes there. And again, you guys know my thoughts. We're not going to bottom on a gap higher, and Amazon kind of making up for a lot of that. I'd watch here for a potential bear pattern on the Qs. Now, that said, the spiders, or the SPX, is getting a little stretched to the downside. So if we take a look here, I showed you this yesterday, right about there. You take that 20 MA, and you copy that. You can see it's getting a little max extended there. So we may need to do a little bit of a bounce. Last week, we remember we sold Friday, and then Monday, we sold the last 3 days. Then Monday, we kind of got a little of a bounce. Tuesday, we got a little bit more of a bounce, and then we rolled back over. We do also have a Fed meeting next Wednesday, so that will come into play. The market might just pause and stay a little range bound into that. But big picture, we did get to that 4,100 level. I talked about that in the morning video, saying that would be max downside for today. And the low of the day was 4103.78. So we basically got there for all intents and purposes. This we can get rid of. That's a divergent trend line. We violated it. I don't really care about it. Right now, upside targets, intraday, you got a lot of levels, but 4,200 will be a level. And then, of course, the 20 and 200 moving average, that's kind of like a necktie right around 4,250. So that'll be something to watch. What's interesting to me about today is we had PCE, and that, again, came in hot. And, actually, it wasn't really PCE coming in hot. It was so much the University of Michigan consumer sentiment. That came in like way, way hotter than expected. And, the markets did sell off. But what's interesting to me is if you look at the ZB, so the 30-year, that finished down 20 basis points, actually holding up really well, though. Take a look at the hourly and 4-hour. I did day trade this as well on the long side, and actually still holding some. But either way, that pattern is actually pretty good. Same thing on the ZN, the 10-year. So that's holding up, and that actually finished green. And the 2-year finished green as well. So, right, so if we have hot data, right, that should mean bonds are going down, meaning yields going up, but that is not the case today. The 10-year finished flat, and it gapped up and then came off the highs. The 30-year yield did finish up, but it came way off the highs. And if we look at a weekly, you're going to see here that the 30-year finished red for the week, with the spiders finishing red for the week, right? So for the last, almost 2 years, the story has been yields up, markets down, essentially. And today we're seeing markets down with yields down. So that's in the face of hot economic data. So is that the market's way of telling us, the bond market telling us, hey, maybe we don't really care about what happened this month or last month. We're looking at the next couple of months, maybe there's a slowdown. I mean, Bill Ackman came out Monday and essentially said that, that's why he covered his bond short. So that's something to keep in mind here. Additionally, again, I talked about this a little bit lately, but utilities, they were down today, but green week for utilities. That's a traditional kind of risk-off look. Utilities up, bonds up. So something to keep in mind there. Take a look at gold, too. Just take a look at the risk-off move towards the middle of the day. This just took off here. If we look on an intraday, it was flat, and then it just exploded right around the same time the VIX took off. So VIX, gold, crude, and bonds all started to take off around that same time. So definitely it's kind of a flight to safety. The market is very worried about this Middle East stuff right now. There's a lot of uncertainty. Market hates uncertainty, so we're seeing that kind of risk off bid. But my bigger overarching point here is, again, like looking at a TLT. Yeah, it was red today, but on the week it was green. And you've got a pretty good, divergence there on the weekly and on the monthly too. So again, I'm not a bond bull, have not been for 3 years, but nothing goes down in a straight line. Everything, will have counter trend moves. And I think we're close to one here for bonds. And it just so happens that, if something breaks in the system here, look at HYG, look at LQD, these are not in good shape. We know that the health of the financial system is at risk. What about that big rally in regional banks yesterday? Oh, came right back in, and you got another weekly close here below. Bears defended 40, right? You had to defend 40 yesterday, and they did that. So if something breaks, again, you could see shorts cover bonds very quickly. That's all I'm trying to say with that. So keep an eye on those things, little changes in the market that happen. Anyways, spiders here. So again, I don't really care about that. We might get a bounce here. You did come into this pivot. There is some support in this area. Again, this whole zone is a box, right? Accumulation right there. I do think we need to go down and test 405. And if you're going to wonder where I'm getting that from, it's pretty simple. Obviously, those pivot lows right there before we broke out, but you can take a look here. It's a 50% fib. It's pretty plain. It's 404, 405 right in that area. And, we have breached that 382, and we've breached it by more than 50% between here and here. So I think at some point we will test that. Does that mean we go down there Monday? Doesn't have to be, right? We could stay range bound Monday, Tuesday. Maybe the Fed, maybe Powell, he's been a hawk. The last two pauses, the Fed is expected to pause, by the way, right? Nobody's expecting that, but this was the pause last time. This was the pause last time, right? Maybe this is what gets us to capitulate. By the way, speaking of capitulation, I don't see it yet, right? Look at the VIX here. Not really showing that. We didn't even take out the high from the other day. So we're not really seeing that kind of, this has been a very controlled sell-off, right? Look at the, if you look at a 30-minute, you're just riding that 20 moving average down. It's not like we're not getting these wild swings like, with the VIX at 30 or 35. Again, so that's just kind of the way I'm looking at it. But right now, market's a little stretched. We could see a little bit of a bounce into Monday, Tuesday. Let's look at the triple Qs here. When cup and handle, right? So everybody's talking about the cup and handle. Everybody's talking about seasonality, and that falling wedge is now broken down. So the Qs here losing that pattern. We can keep this trend line because that could come into play in the future. So we'll extend that out. But right now, and nothing to say it doesn't come down and then you go back up and you could make a cup and handle. But again, a lot of people talking about it, a lot of people front running it. Sometimes they tend to fail. Now, here's the concern. I've talked about this for months. The Qs were green today, thanks to Amazon, but weekly, you lost this pivot and you lost this pivot. That's a big negative. Again, if we look at this on a daily, you've got that 200 MA that will be support. But again, just so you guys can visualize this, because I know not everybody does this for a living like I do, but you can see here, there is no volume past this area. That's a big volume shelf right there. If we start to get into this area, we start to get down here through that 200. There's nothing to 320. That's why I said all the way up, during June, July, I said, I wish, I was like, guys, this is an incredible rally, but we're not building support, which means if you start to roll over, you can slice this very quickly. So God forbid something happens that accelerates the selling and the fear. This can go down really fast, and big tech can play catch up to the downside. That's something that, not a lot of people have, talked about. A lot of people have been thinking that, the small caps would play catch up to the upside. That's not been the case here. And again, so just keep that in mind, but you will have some support there at the 200. It's also a 382 if we go back. I'll show you right there. There's your fib. So I would say that's good support for a bounce. If we get down there, early next week, I think that definitely could be traded. But either way, be careful in this environment. Don't take anything for granted, especially when there's geopolitical risk. IWM, that needs to go lower as well. Believe it or not, this can trade down to 153. I've done some work on this. It does have double bottom, right? 162.50. We did close below that today. It does have double bottom. So it may get a bounce this week, but I believe it's going to 153, just so you guys are aware. Dow here, via the diamond, hit our price target. That's not a buy level necessarily. It's just a price target. We still could get a bid off of it. And you do have weekly chart support here. Right in this area, and the 200 MA, so that could be a magnet as well, but we did finally satisfy that downside target. So both the Russell and the Dow now satisfying those price targets there. We'll see what we get next week. Semiconductors here, up 82 cents on the day, so that was a good positive for the market. Again, it went into the 200, so it should get a bounce there, but this isn't exactly a V shape, right? Look at that price action intraday, just kind of a gap up, a lazy float, and then a kind of fade towards the end the afternoon. So a little bit of a sign of weakness. You don't want to see this consolidate because that will become minor, and then it's going to go into that 129, 130 area. Let's take a look at NVIDIA. So they look what they did, right? So you guys know my level. Look what they did in the last second. Let's look at a 5 minute. Yeah, look at the last second, right? So 403.11. Where did we close? 405. So they saved it. Now, technically, they saved that pivot. However, on the weekly, that's a triggered head and shoulders on a weekly time frame, not a daily. That's a dominant pattern. Yes, I know everyone's talking about it, but here's the thing. We got down here, it tried to trigger on the daily. They squeezed people out, and maybe they just squeezed them out to take it down and finally trigger it. Either way, that has a target of about 315 on it, on the measure move. You also back tested the 20 MA and then closed back below that neckline. I would have liked a weekly close below 403.11. That would have really slammed the door. But either way, we can entertain that pattern now. So NVIDIA, until that gets negated, that is in play. So big negative for the semis if that happens. IGV, so can't get back above that wedge there. So that's a weekly level, and I think we did, let's see, 330.01. Yeah, we closed below that pivot on a weekly. So I'm going to say the IGV is vulnerable here down to 315, maybe even 305. So that's a sign of weakness there for IGV. I talked about this pattern a while ago. Remember when I said we closed below that green bar? I said it's a negative, and it ended up rallying up. But guess what? It didn't make a new high, did it? Then we went down, lower high again, and now we're trading lower. So those inside bar patterns are very important. They teach you a lot. On a monthly here, you still have still a decent chart pattern there, but I do think it wants to get back into that 305, 315 area. Anyways, let's get over the transports here. So transport's getting hit. This has support at 13.5. I believe you hit the 200 week moving average getting tagged there. So we'll see if that can give it a bid. Maybe we'll get a bounce next week. It is into support. It is very oversold too. So keep that in mind. But again, if you get escalation, there's nothing, I can't rule anything out here. But transport's very oversold, and they are into some support. We already covered interest rates here, but again, you guys know my thoughts. I think we're getting a bounce at some point here, and that trade is very crowded. XHB down 0.25%. I don't like that pattern. That still needs to go to 68. VNQ, what can you say? It's a dog. Weekly close below all these pivots. Looks like commercial real estate's going to be a problem. They've got 2 more trading days to get this back above 73.50. Otherwise, you're going to close below the 200-month moving average for the first time ever. Let me just take a look at some of these other ones. Yeah, so IYR, it's the same thing, but it's got more price history. That's right into that 200 monthly. And XLRE, so that one doesn't have one yet, but VNQ, very weak. I use VNQ because it has the most market cap, just so you guys know. All right, XLF here, down almost 2%. So I talked about this. If you consolidate above 32, you can slice to 31.50, and that's where we closed, 31.45. There is some support in this area, but again, that rally, that big rally in the banks lasted one whole day, right? There's the KRE. Down again, you got some pivots here. So, we'll see if we can get a bounce. You also got a weekly gap at 31. But again, financials telling us that there's problems out there. We talked about KRE, that's weak, avoid it. KBE, that's weak, avoid that one as well. KBWB, that's going to go pierce double bottom. Broker dealers here hanging in there, okay. That still can hang in there, maybe get up to 470. If it breaks down, not really much till about 437, 440. Crude here up 2 1/3. Nothing terrible. Still not above those moving averages. If you can reclaim those, then it can trade back up to 90. But that's really all I've got for it right now. I'm not touching crude at the moment. It's just in a range, and I don't have a bias on it one way or the other. If you do take this out, then we can talk about levels near the low, mid 70s. But right now it's just hanging in there and consolidating. XLE, a big shot, right? So down 2.5. Leave it alone. I think it's probably going down to 82 at this point. Maybe even lower, but that would be kind of your first area. But pretty big sell. I don't like how you didn't build support, right? I told you guys that. 1, 2, 3, 4, 5, 6, 7 days down. So pretty good hit there. For the XLE, I believe actually Chevron, take a look at Chevron. So market not liking those acquisitions there. And Exxon gap and crap there on earnings as well. That may need to go back to 102, 101. So big hits there. XOP also coming in. That one's holding up better. That has some support at 140. And then OIH managing to scratch out a small gain, but I don't love that diamond pattern there. That is a reversal pattern. So if you get below that pivot, be careful because this could be vulnerable, but back down to 280 again. Uranium, if you had CCJ holding up, no problems there, just doing weekly consolidation. And the same thing with URNM, although it's a little bit on the weaker side there. Nat gas pulling in, that did have the contract flip here. I don't like using this chart. I've been using the continuous a little bit, or not the continuous, I'm using the adjusted one a little bit more lately. So on TradingView, when you get these big contract jumps, it makes the chart very difficult to read. This one is adjusted. But either way, you had a nice move, hit the 20 MA, and then we bounced off that. Weekly chart looks pretty good here. Up move outside of that pattern, 1-2 pullback and a pop. So that looks okay. For another advance, might need to do some consolidating, though. Nat gas moves very fast. Dollar index, kind of a quiet day, but again, we had a nice falling wedge there, a little pennant. We popped through it, and then a 1-2 sideways. Again, if this continues consolidating, especially on the weekly, there is nothing wrong. But I think it's got to do a little bit more to get through that pivot. And if it does, you get that moving average to catch up, and we're still sideways, this can go higher, possibly even into 109.50. So don't count the dollar out just yet. It's holding up, and again, I know gold is up, but the gold and the dollar don't have to go up and down together. They or inverse. They can go up and down together, especially when there's risk off, especially when there's fear. Gold here finishing at 2016. What can you say? Up move, consolidation, and it's pushing higher. It is getting overbought, just so you know. But the trend is up on the weekly. The trend is up on the monthly. And the trend is up on the daily. So I can't really say there's any problems with this right now. You will have some resistance at 2020. That's that pivot there. And 7.5 retrace. So watch that next week. But gold hanging in there okay. I can't say there's anything wrong with it right now. Silver up 1.3. That's still consolidating for a move. Got to get above this recent pivot here. If you do that, then it can get up to 25. Platinum still in a range there, leaving that alone for now. Palladium still leaving that alone. Copper, nice outside move there, up 1.6. I still don't love what it's doing on the weekly, though. That could be beginning of a bear pattern for a move down to 340, possibly even 330. Lastly, Bitcoin still hanging in there. It is down a little bit today. Which is interesting to me is that it may just be because it's so overbought. But right around the time gold was pumping, Bitcoin came in, and gold, oil, and bonds and the VIX all started bidding up right around 1 o'clock, and Bitcoin started dumping exactly at 1 o'clock. So I don't know if there's anything to that. But Bitcoin very overbought here. There is resistance at 35. Again, you guys know my thoughts. It needs to pull back or consolidate before advancing, but it is holding up just fine right now. Again, lastly, so markets here, we are a little stretched to the downside, but we're not. I'm not seeing capitulation yet. And bottom line, I think we got to get down into this area here, one way or another. Do we stall out and go sideways, bear flag? Do we retrace? I'm not sure yet. If anything changes, of course, I'll let you know. But I do believe that is going to be the case here before it's all said and done, at least. And remember, we do have a Fed meeting Wednesday. That will be a major, major Fed meeting. They are expected to pause. So we'll see what we get here with the market. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all next week.